It is a huge honor for me today to be podcast interviewing Dr. Milan Somborac, who was born in Belgrade and is now in Collingwood, Ontario, Canada. He graduated from the University of Toronto Faculty of Dentistry in 1965. He practiced dentistry for 55 years until December 2018. And he is the founder of the Monday Morning Millionaire, How to Beat Wall Street at Its Own Game. He features the 7 effective habits of successful investors. He thinks the dental profession has been over-marketed and manipulated by the investment community at large, and how a dentist can save hundreds of thousands of dollars over the course of their career using predictable exchange-traded funds. Did you know that you can make more money before breakfast on a Monday morning than you ever did in your best week at work? Few do, most could. His wife, every Monday morning that is a holiday, he is a practicing dentist. He was a practicing dentist until December 28th. And with no financial credentials, but more than 50 years of stock market investing experience. This is why the website is called the Monday Morning Millionaire. And you just go to it. It's www.mondaymorningmillionaire. And he was referred to come on the show by Timothy A. Brown. Timothy Brown, what can you say about this man, Milan?
Well, I met him about 25 years ago when a dentist up in this community passed away. And the widow contacted Milan to say, my husband is deceased very suddenly. We have to sell the practice. I'm an appraiser and broker. Some of your viewers may remember me from episode 1111 that you and I did a couple of months ago, November of 18. So that's where I first met Milan. But my father had known him for 30 or 40 years before that. He's an exceptional individual. He's a mentor to me. He's an intellect. I helped Milan sell his dental practice here in Collingwood, Ontario about a year ago. He had a lovely building. He had a long legacy practice. The fellow that's taken it over, we're hosting a big career celebration. So that's my relationship with Milan, is that of a mentor, that of his appraiser and broker, and we're friends. So in the process of helping Milan to sell his dental practice, I said, what are you going to do? And I think that's a question every broker asks every dentist, be it anybody across America, Canada, doesn't matter. What are you going to do when you sell your dental practice, doctor? Well, Milan didn't miss a step and said, well, I'm going to publish the Monday Morning Millionaire book. And this is the hard copy. My company published it for Milan, because I also wrote a book like you did, Howard. And you have a copy of my book, Howard, and a copy of that's on its way to you. And for the viewers out there, Howard, Milan, and I are all going to be at the Caribbean Dental Program in Barbados in April 2019. So I'm plugging the Caribbean Dental Program for anybody watching. Come join Milan, myself, and Howard. Caribbean Dental Program is the website, April 2019.
I look forward to meeting you there, Howard.
Yeah, we'll all be together. I'll finish in a minute, and then it's all about Howard and Milan. But this book, MondayMorningMillionaire.com, many dentists, when they come to me late in their career, they complain that I don't have enough to retire. What's the value of my practice? Is it going to be enough for me to live a comfortable retirement? And of course, I made the assumption for many years that all of these dentists had effectively saved, that they had had proper financial advice. They'd put their pennies aside and, accumulated a nice IRA. Here in Canada, we call it an RSP, same thing, tax effective retirement savings account. The sad news is that the large majority of dentists that I have worked with over the years have been, in my opinion, ripped off by the financial community. And Milan is going to speak very candidly and very frankly about that. Now, before I hand the mic back to you, Howard, for Milan to go at it, I just want to say one thing, that Milan is so humble. He would not normally promote this, but I'm going to. This is a certified Guinness Book of Records certificate for placing dental implants in the oldest person in the Guinness Book of Records history. And in this particular plaque, the patient was 94 years of age and 354 days, born June 1907. So not only is he an accomplished writer and an author now about financial investing and advice, he's a very, very accomplished dentist. One of the 4 Canadians to ever develop and fund and develop an implant company. Just a wonderful individual, great creativity. I have about $25,000 worth of restorative work in my mouth. Yes, this is the practitioner who did it for me. So that's my introduction. I want the viewers to stay in with this one, guys. You're going to love this one. You all know Howard, but you've never met this man, and this is a well worth watching episode of Dentistry Uncensored with Howard Farran and Dr. Milan Somborac.
Milan,
have a good show.
Thanks for that intro. Milan, we met, 30 years ago? I was lecturing in Toronto.
Yeah.
And, did I have any hair back then?
I don't recall. But what I do recall, Howard, from your presentation, in those days, gas stations were full service. There's no such a thing as a full service gas station anymore. They disappeared. But you walked up to a man in the audience and you said to him, "What do you do?" And he said, "I'm a dentist." So you could pick him out as a dentist. And so you said, "When you order gas, how do you ask for it?" "Well, I say to the attendant, fill her up." "Okay." Then you walked over to a lady and you said to her, "And what do you do?" And she said, "I'm an assistant in a dental office." So you knew to pick out an assistant in a dental office. And you asked her, "How do you order your gas?" And she said, "I say to the attendant, give me $20 worth of gas." She knew the amount that she could afford, whereas the dentist always asked for a full tank. So that's memorable. And I don't know how to tell you this without hurting your feelings, but that's the only thing I remember from your lecture. Except that.
Yeah, that's true. I think dentists only think in chunks, like this costs $1,000 or $5,000. They don't understand living paycheck to paycheck and going to like dentists when they go to a grocery store, they just get whatever they want, throw in the basket. They're not sitting there looking at price and at what their budget is or what they can buy or not buy.
And Wall Street knows about that, Howard. Now, your viewers are dentists, all of them, right?
Right.
Most. I'm going to ask your viewers a question right now. What percentage of dentists do you, viewers, think can retire at age 65 and maintain the living standard which they had while working? What percentage?
Well, I would guess it's probably only 3%.
Very good, Howard. Very good. The American Dental Association has published those figures recently, and you're just about bang on. 4% can do it.
4%.
96% of dentists, according to the American Dental Association, cannot retire at age 65 and maintain the living standard that they maintained while working. Now, for Canadian dentists, the figure is probably the same, although I haven't been able to dig it up. So why is this, do you suppose? Well, a whole lot of reasons, but about 80 years ago or so, there was a young man who inherited a lot of money. So he went to Wall Street to have it invested. And so he was being squired around by a broker who was hoping for his business. And the broker showed him this part of Wall Street and that part of Wall Street. And there's a yacht club at the foot of Wall Street. So the broker said, and now this is J.P. Morgan's yacht. And this is Jesse Livermore's yacht. And on he went like that. And the man said, and where are the customers' yachts? Where are the customers' yachts? Now, let's fast forward by about 40 years. KKR bought Nabisco. And one of the key figures involved in there was explaining to his wife how Wall Street works. So he said to her, there are 3 rules on Wall Street. Rule number 1 is never follow the rules. Rule number 2 is never pay. And rule number 3 is always lie. Nothing had changed from the days that the young man said, where are the customers' yachts? Right about the same time as this KKR event took place, the Harvard Business Review published a study showing that 10% of Wall Street people are psychopaths. 10% are psychopaths. They're all Bernie Madoffs or Bernie Madoff wannabes. And in the general population, 1% of people show some psychopathy tendencies. So that's the environment that we're working in. Now, right about the same time that the Harvard Business Review published this paper on psychopathy on Wall Street, Michael Lewis, wrote a book called The Big Short. And the opening line in The Big Short, very well written book, popular book, the opening line is, to this day, I don't understand the willingness of a Wall Street bank to pay me hundreds of thousands of dollars to dispense investment advice to adults. I was 24 years old, never run a business, didn't know how to read a financial statement, I had no interest in stocks or bonds, which direction they moved. I never even owned a bank account. That's what's happening on Wall Street. So these are the people, the psychopaths, who are targeting us in dentistry, because the way we buy gas, we say, fill her up. And we never look at the price of groceries when we go to buy shopping. So they know that we make money. And also, in dentistry, success in dentistry to a large extent depends on trust. We have to trust our patients. They have to trust us. If they don't trust us, they go to somebody they do trust. So we see the world as we are and not as it is. We in dentistry are trusting people. And the psychopaths on Wall Street know that. So they target us because we got an income and because we're trusting people. And so they develop systems which allow them to make incredible sums of money. When I graduated in 1965, in Canada, the top earning dentists' incomes equaled the top earning bankers' incomes. Today, some 50 years later, a top earning banker in Canada makes in 2 weeks what takes a top earning dentist a whole year to make. I'm not sure what the figures are exactly in the United States, but they'd be very similar. They'd be very similar. So now what we have to do is develop habits which work. You know, the stock market actually has 5 major advantages. One is the returns are good. There was from a Swiss bank report on the performance of investments over a 100-year period. At the very top were securities, marketable securities, and that included things like stamps and gold and platinum and diamonds and wine and violins and so on. The top was securities, was investing in the market. That was number one. So that's one of the appeals of investing in the market if you do it correctly. The other one is absolute liquidity. If you want to sell something, you can sell it in a fraction of a second. It's an astounding thing to watch your order go through. You place an order with a broker, it's filled seconds later. Absolute liquidity. The third huge benefit is quoted prices to the second. You don't need a Tim Brown to appraise your practice. You can know instantly to the second what that security is worth. And the total liquidity, the quoted prices, and the record keeping. We're all very bad at record keeping. One of the best ways to make money in any investment is to keep lousy records. Well, the broker provide, because the law requires it, very accurate records. So those things make investing in the stock market appealing, but it also draws the psychopaths, the con artists, to take advantage of trusting people. So invest in the stock market. Now, the rules of the habits of highly effective investors, and I see 6 habits that work really well. The first one is you gotta save. You gotta have a savings program in place, because without it, the other 5 just don't do anything for you. So the savings program, if somebody starts saving early in life, say in their 20s or 30s, they need to save about 10% annually until retirement time, and they will have enough to live the way they live while working. If they start later, in their 30s or 40s, they got to save 30, 40%. If they get into their 40s or 50s, by the time they start saving, they got to save almost 50% of their income to be able to live in retirement the way they were able to live while working. So that's the second issue that is important. The first issue. The first issue, you got to save. The second one is do it yourself, because Wall Street people have so many ways to bury their fees and their commissions that it's an astounding thing. So if you do it yourself over the course of a lifetime, I bought a Tesla Model S, fully loaded with the money I saved by investing myself. So I'm saying to my colleagues, you can save a year's worth of income by investing yourself. So that's the second one. The third one is don't pick stocks. Buy the American economy as a whole. American economy, because it's the strongest economy in the history of mankind. And you can buy the American economy as a whole by buying an exchange-traded fund which mirrors the S&P 500. And I wouldn't be surprised that some of your viewers don't know that the S&P 500, the 500 largest stocks, which really the performance of the S&P 500 mirrors the American economy as a whole. What about the Chinese economy? Well, you can't trust their records, says The Economist, a widely respected publication. And the communist regimes in the world have a history of having no respect for private property. They confiscate when they feel like confiscating, so stick with the United States. The third habit is don't try and time markets, buy and hold. American economy, buy and hold. The fourth is rebalance, have a large cash percentage. Investable money should be in cash, a money market cash, while the other 50% is invested in an exchange-traded fund, so that when the market tanks, as it happens to be doing now, you got enough money. And the last one is avoid complexity. Now, Pankey, LD Pankey. Most of your viewers would know who LD Pankey is. Most of your viewers know who Howard Buffett is, Warren Buffett. Warren Buffett took a program at Columbia University that was run by Benjamin Graham. And LD Pankey took the same program maybe 10 years earlier or so, because he was older than Buffett. And he recommended, Pankey, this ratio of, let's say, 50-50, could be 60-40, so on, depending on personal attitudes. When the market drops 10%, Pankey said, put a third of your money into it. If it drops another 10%, put all of your money into it. And if it drops another 10%, borrow to buy bargains, because price really is the main risk. If the price is low enough, you eliminate a lot of risk. LD Pankey, 10%, put a third of your money in there. 20% drop, put all of it in there. 30% drop, borrow money. So now, I've talked a lot. Your turn to ask some questions.
Well, okay, so most of the people who listen to podcasts are young, right? And they're gonna. I know how they think, because I talk to them every day, and they're gonna think, well, I graduated $400,000 in student loans, so I'm not gonna invest money. I'm gonna try to pay down my student loans. What do you say to a 25-year-old who doesn't know if she should take that extra paycheck and pay down student loans, or invest in the S&P 500 exchange traded fund?
That's a tough question to answer. The answer for that really is that the time value of money is such that it's a miracle. Albert Einstein called it the eighth miracle of the world, is time value of money, the compound interest, so that if you invest a certain amount of money today and let it go throughout an entire career, a dental career, 30, 40 years or so, it'll really do this exponentially. So that the individuals who are carrying that kind of debt should pay down debt and save some at the same time, say 50-50. Because the debt, which we all have to incur, partly to pay off our student loans, and most people are working for corporations down in the United States, that's happening in Canada too, but people will start up their own practice. You can't start a basic practice with 2 chairs and 800 square feet for under $500,000. It's a lot of debt. But it has a limited, it's always going to be paid off in 7 years or 10 years or so, whereas the savings will take a long time to accumulate and to grow. So the answer to your question really is I would take half to service debt. Also depends on the interest rate on the debt. Right now, interest rates are low and debt is much easier to carry. When I bought my office about 35 years ago, interest rates were 20%.
1980.
Right?
Well, what year was that when you bought your office? I mean, interest rates were 20.5% in 1980.
1980, that's right, yeah. But I said, this is a tool. I've got it. The office is a tool for making money, and it's worth incurring that kind of debt at that kind of interest rate. So interest rates now are so low that it's worthwhile. The risk is significantly reduced.
So what year were you born in?
1940.
So from 1940, let's just say this is 2020, because you can see clearly with 2020. In 40 to 20, almost in 80 years, when do you think the worst economic times were in your life? Was it 1980 when interest rates were 21%?
1987. 1987 was a stock market crash, which was bigger than the one that we just experienced in 2008, 2009, 1987. And I've forgotten how much the market tanked, but it tanked hugely. Now,
25% in one day. It was Black Monday in October. I graduated May 1187, and then Black Monday was in October. And it was a scary thought opening up an office after that thing tanked. I just thought, oh my God, did I make a bad decision?
yeah. No, that devastated a lot of people. I happen to be very lucky, Howard. In those days, you couldn't trade as quickly as you can today. So the Friday before, I entirely got out of the market because I was visiting my daughter who was going to school at Interlochen, that school there that in the northern Michigan. So I went to visit her, and so I just got out of the market because I was feeling nervous. Talk about a stroke of luck, because the market tanked on Monday in 1987. I was entirely in cash. I was able to buy bargains, but that was entirely luck. Look,
Well, I don't like to tell this story because when you tell this story, people are going to think, well, this isn't true. This is crazy, whatever. But March of 2000, I call that the Y2K crash. From 87 to March 2000, the internet bubble. A lot of people call it the internet bubble. I don't really call it the internet bubble. I call it the March 2000 because everybody was over-investing and over-buying because they were trying to get their computers compliant for the year 2000, because to save memory and space, they had 2 years for digits. So at 99, when the next year be 00, and your computer would think it was 1900. So everybody was buying hardware, software, everything imaginable. And then after March, and then after the 2000, everybody was done. There was no more real aggregate demand for all this stuff. And it took about till March before everybody realized this game's over and it crashed. But I actually got out in November, and I'll tell you why I got out in November. And the same thing happened to me on this last one with Apple. At that time, the four big stocks were Cisco, Dell, Microsoft, and Intel. And they called Wintel, Windows and Microsoft. And what I thought was amazing, that they were all, they all kept doubling from 93 to 2000. And I was sitting there one night in my office, and I realized if these stocks all double again, they'll be worth $1 trillion. And then I got a list of the countries' GDP. And at the time, like right now, the U.S. GDP is like 19 trillion. I think back then it was like 12. But the last $1 trillion company GDP was Italy, and it was worth $1 trillion. And I was looking at my little Cisco router blinking, and I thought, is this thing really worth Italy? I mean, Italy's got 75 million people. They got Rome. They got.
Italy is. It's one of the G8 nations.
Yeah, I'm like, I don't care what anybody says. This router does not equal who would trade this router for Italy? Nobody would. And so I got really nervous. And then the next day, my yard man rang on the doorbell, and I thought, why is he ringing on the doorbell? I pay him the first Monday of the month. And so I didn't know what was going on. And he gave me a little Post-it note. And it was a stock. It said STF. I said, what's this? He goes, well, you've been very good to me. And he goes, I like you a lot. And this is a stock tip. He goes, this stock is going to double. And I thought, oh my God, is this an investment house or a casino? When your landscaper Mario is giving you a stock tip and he thinks it's going to double. I said, Cisco's not worth $1 trillion, and it's not worth Italy. And my landscaper is trading it like a casino. So I got out in November, and it continued to go up and up and up. But then a third of a year later in March, it completely tanked. So what would you be telling? Just a couple months ago, Apple was worth $1 trillion. And when it got worth $1 trillion, I was telling all my boys that story again. I was telling, that I don't really know if Apple's worth $1 trillion. And before you know it, it's down 25%. I almost wonder if $1 trillion valuation is some kind of a glass ceiling.
Well, Howard, you're not only sharp in dentistry and with your MBA, you're also doing really very well with your reasoning. The high-tech stock collapse in the year 2000 was really mostly the NASDAQ. All the stocks that you named were listed on the NASDAQ. I don't think that the Dow Jones did as badly, but it did badly because rising tide lifts all boats, and a falling tide, all boats go down. But so, yeah, you're right. Interestingly, Tesla, for example, now the valuation of Tesla, which makes fewer cars in a year than General Motors does in a day, is greater than General Motors. So the market is gone insane, and that happens a lot. Now they talk about the efficient market, but there are exceptions to the efficiency. Efficient market says that all knowledge about any company is available to everybody equally. So therefore, you can't beat the market. And over the course of time, say a market cycle is roughly 5 years, you can't beat the market. And the very few people who do, it's difficult to differentiate whether they did it by luck or whether they did it by skill. Warren Buffett himself, who is recognized as a very skillful investor, now is advising people to buy the American economy as a whole by buying an exchange-traded index fund which reflects and mirrors the S&P 500, and there would be the SPY, SPY is the market symbol, and VOO, IVV, those are market symbols of 3 or 4. There are actually over more exchange-traded funds now than there are stocks, but only 3 or 4 reflect the American economy as a whole by mirroring the S&P 500. And those are the ones that we in dentistry should be buying and holding, not timing, not picking stocks. The only way to beat the market is to break the rules, which I just mentioned, save, buy the American economy as a whole, don't time markets, they rebalance regularly and avoid complexity. You got to break those. So I have what I call a fund portfolio. Our members, Monday Morning Millionaire members, I recommend that they have a core portfolio in which they follow these rules carefully, and they will wind up making about 7% after inflation. And that's enough to retire on when retirement time comes 30, 40 years after graduation. So if you want to gamble, you can either go to Las Vegas or you can stay home and have what I call a fund portfolio where you break some of these rules. And boy, am I ever taking a kicking in my fund portfolio because I bought Abbott Laboratories. They make some of the scalpels that we use, for instance, and they're a very solid company. They're actually what's called dividend aristocrat. Dividend aristocrats have been paying an increasing dividend for over 25 years, and there wouldn't be 30 of them in the S&P 500. And AbbVie is one of those, so I bought it, and guess what? I bought it at the top. And the reason I bought it was because I'm involved in options, puts and calls, and that's kind of a fun thing in my fund portfolio. The money I made in puts and calls is nowhere near the money that I lost by buying at the top. But it's my fund portfolio. It's 5% of my investment. So I'm not going to get hurt. And so that's what I recommend for our dentists. And so what you're saying about Apple, one of the rules is don't pick stocks. You're picking a stock when you buy Apple. You're picking a stock if you buy Tesla. You're picking the stock.
But, sharp minds, though, can spot irrational exuberance. I mean, like you were saying, Tesla was worth more than GM, and Tesla makes in a year what GM makes in a week in cars. Obviously, something's not right. Just a little while at the top of the bubble, I was telling everybody in my lectures, I said, how could Netflix be the same value as Disney? Have you ever gone to a Netflix theme park? Have you ever heard of Disneyland, Disney World, Disney Cruises? They own little things that you never heard of, like ABC, ESPN. I mean, some things you just look at it and you say, this is irrational exuberance.
That's right. Yeah, that's a term that was coined by, I think, Alan Greenspan, irrational exuberance, and for sure. But, the third rule of these habits, the third habit is don't pick stocks, because you can't make a mistake by buying the American economy as a whole. Now, empires have 100% failure rate. And the day will come when the American empire will have its failure, but it's nowhere near in sight. So you buy the American economy as a whole rather than picking stocks, you won't be making these kind of mistakes like you could by buying Apple at the wrong time. A lot of people made a lot of money in Apple. A lot of people one of my neighbors here, she said she's going to buy Tesla stock when it was much lower and make enough money to buy a Tesla. And it worked for her. Fuck. Yeah.
Yeah.
So
back to these young dentists. Like, Timothy was saying that 95% when they retire from dentistry, they gotta significantly lower their their lifestyle. So what are you doing with the Monday Morning Millionaire? Are these if dentists go to Monday Morning Millionaire, what is it? Is this some type of how does it work? What does it cost? What are you doing with Monday Morning Millionaire, the website?
We don't recommend stocks. What we do is express opinions, and we emphasize the sleep habits of highly effective investors. We provide support for them from the academic investment literature, and the people who write these papers and report them in the academic investment literature do so to earn a PhD. They do so because they're professors, they need to publish or perish, and there are no ulterior motives there. So that's what Monday Morning Millionaire does, is supports people in the proper investment habits. We also answer questions. We have 4 self-made multimillionaire stock market investors who answer questions. One of our experts advises a $3 billion pension fund in a county in Florida. And so answering questions from experts like that is a big help for them. We also review academic investment papers. We don't review books, and the reason we don't review books is there are some wonderful book reviewing websites out there. I can't add to them in any way. They're really frustrating.
So from technically, when they decide, okay, they need to save, they're following the rules. Number 1, save. Number 2, but when they're going to save, do you recommend an online, like, there's TD Ameritrade, there's TradeStation, Charles Schwab, Fidelity, Interactive Brokers, Robinhood? What would you recommend to Susie Q living in Kansas? How would she mechanically save into?
The competitive forces of a free market economy, which to a large extent we have in the United States, almost force them to behave similarly. So any of those would do. I happen to use Toronto Dominion Bank because I started with them when I was a kid, more than 50, 60 years ago. So my first money that I earned working on the railroad went to Toronto Dominion Bank, and I stayed with them, and they have an American presence, the TD Ameritrade, but Schwab would also do the job, and so any of them. They're forced. 30 years ago or so, commissions were $30, $40 for a small trade. They could go up to $100 if the trade was larger. They could go up to over $1,000 if you were trading a large enough block of stocks. Today, for under $10, you can do $1,000 trade. You can also do $1 million trade for under $10. Competitive forces, plus computerization has made it a lot easier for them to be more efficient, but you can ignore commissions today. So to answer your question, the competitive forces and the regulatory environment forces all the investment banks to act very similarly. So I don't think it matters where you go.
So how much does it cost to join your club? How much?
$180. $180 Canadian. Canadian $180 and a Canadian dollar.
$180 one time, a month, a year?
Year and annually.
$180 annually. And then what are the features they get? Do you guys have tell them if I signed up $180 Canadian right now for mondaymorningmillionaire.com, what would I be getting?
You'll get into our website for that, and you'd be looking at the answers to a lot of questions that most investors have, that other people have already posed these questions. We have answered them, and they're on there for people to review. They would get a book called The Habits of Highly Effective Investors. These habits that I talked about: save, do it yourself, don't pick stocks, buy the American economy as a whole, don't time and have a 50-50 asset allocation, 60-40, 30-70, doesn't matter, depends on your stage of life, and avoid complexity. So they would get that. The answers to their questions is a big one, and the reviews. Now, interestingly, in dentistry, when we do a crown, for example, we want it to last forever. We don't deal with planned obsolescence in dentistry. You do an endo, it's supposed to last that patient forever. And so the people who join us for $180 could, after a year, go on their own and not need us anymore, because the rules are not that difficult. The habits are not that difficult. They have to become ingrained. but they don't need us anymore if they want to maintain a membership for the other benefits, which is answering the questions. We'd be glad to have them, of course. But that's it. The market out there that's interested in money is huge, huge. What's the population of the United States? Damn near everybody over the age of 15, maybe even earlier than that, are interested in managing money adequately. So we can make people independent in a year. Don't have to join us second year. For your $180, you learn all you need. Now, if you want to stay with us because we review academic papers, because we answer questions, because we keep finding in the daily investment literature material that supports our investing style, you'll be welcome, of course. What's out there? A journalist who is writing a columnist for the Wall Street Journal, for any financial paper, he has to produce something once a week, twice a week, 3 times a week, even if there's nothing to say. So reading financial material is like drinking from a fire hydrant. And what we do is we present the worthwhile material so they can have it from a champagne flute. And so if it's worthwhile to retain or to renew membership, go for it. But for $180, that's what they get. So how do you sign up? You want to sign up by going to Monday Morning Millionaire on the internet. Just type in any search engine that you have, Monday Morning Millionaire. Up comes our website, and over there it'll walk you through how to sign up. And I say it's the best $180 you can spend on, because what money managers charge. Imagine if somebody came into your office for a crown and you said, I'm going to charge you % of your net worth. Low. Well, that's what works. So that's how it happens on Wall Street. They have nothing to do with the accumulation of your assets, but they charge you as a percentage of the size of your portfolio. Unheard in any other field. But if you take that yourself, by managing yourself, you can save an enormous amount of money.
Well, the industry, America does really well in their GDP and their economy in healthcare, military, insurance, banking, finance, music, movies. But insurance, banking, and financing, I mean, the returns they make are just they're just incredible. But going back to the dentist, I think they're trapped because they come out, they didn't save up for dental school, then go. They borrowed money and graduated $400,000 in debt. And then they won't go buy a car, they'll go finance it, and GMAC financing makes more money than GE. I remember one of my favorite books in the world was The Profit Zone, and it took each industry, and everybody talks about how many billions in sales, but they were just talking about net income profit dollars. And Chrysler, GM, and Ford hardly made any profit dollars compared to GMAC, the people financing the cars over 5 years, even the insurance companies like Progressive and all that. And any industry they went in, they just ranked every industry by profit dollars. Like even in dentistry, I think most profit dollars are in the insurance companies, not the manual labor dentist working with his hands doing the surgery. It's the insurance companies. It's people who finance. And so what I see with dentists, I mean, I'm 56 years old, but they get out of school and they go use other people's money and they finance a car for 5 years. At the end of the 5 years, they want a new car, so then they finance another 5 years for another car. The average American will finance 13 new cars in their lifetime between the ages of 16 and 72. I mean, I know dentists my age that they're getting a Tesla, but again, they're getting it on a 5-year loan. I just had a patient the other day. She's 80 years old and she just bought a house, and she bought a different house, and it's on a 30-year mortgage. I'm like, do you seriously think you're going to live to be 110 years old? So I see, and I hate to be racist about this, but in my observation, it's racist. People born in the United States are using other people's money on mortgages and car loans throughout their whole life, and only people who come here that weren't born in the United States, who voted with their foot, to take a big risk and ambitious and vision and came to America to follow their dream, they're the ones that quit using other people's money by age 30, and then they start saving their own money and they start making money off other people's money. And I mean, you just see that routinely. I can look at any 50-year-old dentist, say, where were you born? Which country? And if he says United States of America, I said, I bet you still have a home mortgage, a car mortgage, credit card debt. How do you psychologically coach these people to quit living above their means? It's not what you earn, it's what you burn. And you're either going to make money off other people's money in interest, or you're always going to be paying all of your money for other people's money so you can have the car and the house. How do you get them to psychologically cross that?
Howard, you must have read my book because in my book I say that most people have too much house and too much car. Now, the average individual today is living in a house twice as large as the house that his parents lived in. His parents lived in a house that's 1,200 square feet, had one bathroom. Today, the houses that are double that size and have 4 bathrooms for 2 people living in them. So, and most of them are financed and with borrowed money. So, too much house and too much car. And the reason for that is that people who sell houses and people who sell cars are so good at marketing, and the appeal of having your own nest egg is so strong. So they tell you, the banks will tell you that you should spend, up to, 28% or 30% of your income could go to housing. And those are 2 incomes, husband and wife. Wife gets pregnant, household income drops, they're struggling. And the banks, they don't want to own your house, but they want you to borrow as much as you possibly can and manage. So that's what they do. My house is worth about 5% of my net worth, and Warren Buffett's house is worth 0.00% of his net worth. So too much house and too much car is really the prevailing economic picture. And people who are financing these things, who are lending the money, are the ones who are making the money. Yeah, and it's interesting observation that GE, before it fell apart, was making more money on the financial side of the GE than they were selling the products that they make. So, and then
another thing you notice when you're 56 and you've been doing this 30 years, and you look at and see where all your buddies are at their age. Another huge monster variable is divorce or not, or number of times divorce, and or children or not. I mean, you can't get divorced 3 times and have 3 kids and end up with the same amount of money as a dentist who never got married, so he never got divorced, he never had any kids. I mean, 25% of baby boomers never had a child. And it looks like about 1/3 of the millennials are never going to have a child. What advice would you give? And then I don't understand the whole marriage thing. I mean, I get the marriage thing if you're going to bring a child into this earth and live it. These guys, they meet in dental school and they're buddies and they're in love. So the first thing they do is go find some lawyer to legally, contractually marry each other. And I'm like, what the hell did you do that for? I mean, half of all marriages end in divorce. Why are you signing a legal contract with someone if you don't have to? Because right now it's young and romantic and she smells nice, but someday you're going to have a lawyer looking down your table and taking half. So what's your advice on the millionaire next door versus marriage, divorce, and children getting you to the finish line?
Well, children, to raise a child from cradle to finish university, it's close to $300,000, maybe more. So you have to budget very carefully when you're planning to have children. Having an only child is an economic advantage, but not such a great thing for that only child. Probably the only child should have a sibling. So you have to take that into account, certainly, for that. And so the worst thing that you can do economically is get divorced, because your assets are split. So a lot of people, and your viewers will know a lot of people who are staying together for economic reasons, even though they're living separate lives. They don't have to buy 2 houses. They're living under one roof. They live separate lives. And so they avoid the expense of divorce. But divorce is costly. And this divides the net worth of the family accumulated, depending how long they've been married, depending what they brought into the marriage. All that is complicated. And the lawyers are making money on divorces, for sure. They call it family law. They should call it anti-family law. So I've seen a survey which showed that high divorce rates indicate a level of unhappiness, whereas others say the opposite. High divorce levels equate to high levels of happiness because you exit out of an unpleasant situation in a case of a divorce. So a lot of divorced people who have paid a lot for their supporting the spouse make the best money they ever spent.
Yeah, that's the old joke. Why is divorce so expensive? Because it's worth it. So again, talk to that 25-year-old girl. She just graduated. She's $400,000 in debt, and she doesn't know, should she work as an associate where she's making $150,000 a year, or at $400,000 in debt, should she go borrow another $750,000, which is the median liquid price of a dental office for sale in America? If she's $250 in debt and buys a $750 office, she's now $1 million in debt, and she's 25 to 30 years old. What would you tell that person? Does anything change?
I use a woman dentist as an example. For women, it's a different situation too. Women are really special. They're so much stronger than we are. They always have two jobs, and one is motherhood for most of them. And so a career woman dentist will not put in as many hours as a man will because she has other responsibilities. So probably she will be better off working for a corporate organization rather than trying to run her own show, because if she does, it's so demanding. I don't have to tell your audiences how demanding running a dental practice is, that she has to do that at the expense of the family. You wonder whether it's worth it. So for most women who tend to be part-timers in veterinary medicine, in dentistry, in medicine, working for a corporate situation is probably a better way to go.
Are you seeing that in Toronto? I mean, do you have evidence of that in Toronto? Do you think more women are taking associate jobs than male counterparts?
Canada is an interesting situation, Howard. We produced a lot of dentists, and so Toronto is so saturated with dentists. You know, every priest wants to see every pew occupied, and every merchant wants to see stuff flying off the shelves, and every restaurateur wants to see a lineup outside the restaurant. And the people who make dentists want to make more dentists, and they've been very good at it. In Canada, they've been very good at it. So we got a dentist to population ratio in Ontario, 1 to 2,000. It's higher than any other place in North America. So then you walk down the streets of Toronto and you see billboards saying free checkups, free cleaning, free whitening, free x-rays. And then the people walk in. One of my patients, kid, I saw her since she was 3 years old. Now she's a university student in Toronto. So free cleaning. Hey, this is worth it. He walks in there. We'll do a checkup for you too for free. And they find 15 cavities. We all have built-in crap detectors. So her built-in crap detectors say, I'm going to go and check with my dentist. She comes to the office, she didn't have anything that she needed doing. Now, if he did that with her, he's doing it with everybody. So some of these organizations, corporate dentistry, have a requirement, economic requirement for the people to meet. And so they're doing occlusal restorations all over the place because you can't detect occlusal decay on x-rays. And so patient comes in and they'll fill every occlusal fissure with a restorative material, with composite, and meet their requirements that way. So that's something that too many dentists, physicians, veterinarians is not good for society. Not enough is not good for society. So Mexico has one dentist per 600 people. That's why people are leaving for the Mexican dentists. They're going from San Diego. Mexico is not very far, and they go and get the dentistry done over there, which then the San Diego dentists redo.
Now, are you the founder of the Monday Morning Millionaire?
I'm the founder of Monday Morning Millionaire.
And how long has it been going?
We just finished our first year. We just finished our
and
first year.
And what percent of your clients are dentists?
Most are dentists. We got a very nice rating from Clinicians Report. Clinicians Report looked at this, Gord Christus's people, and they gave it a very high rating. And so Clinicians Report comes out with an annual report of the best products. Last year, Clinicians Report evaluated 700 products. 1 in 5 gets thumbs up. 4 out of 5 get thumbs down. And so CR Clinicians Report serves as, you could call them, the consumer reports of dentists, because the only information that dentists get about a new restorative material, a new handpiece, a new headlight is what comes from the marketing department of the manufacturer. Clinician Report is unbiased. And so they rated this book very nicely. And so because of that, got a lot of dentists.
Hold up the book.
That,
Milan, Somborac, DDS. That is. It's funny. I love Gordon. Do you know Gordon has an older brother who's like a big success?
His brother is 90.
Yeah, and he's a big time banker, isn't he?
He's in the financial world, right? Yeah.
Yeah, very successful in the financial world.
That's right. Yeah, and
Yeah.
he's so enthusiastic about what he does. You know, you love to see people who are enthusiastic about what they do, like you are about what you're doing. And so the Gordon's older brother is like that. And so is Gordon. You know, Gordon and Rella were cited by American Congress for their contribution to society at the 40th anniversary of Clinicians Report. So the nice report that we got from them, including the fact that it's one of the best products for 2019, has attracted a lot of dentists.
I want to go back to a couple behavioral things because I love everything that you do. I love your message. I love all that stuff. But we're still talking to a lot of young kids, and I see the women. They're so much smarter than men. I mean, if you meet a woman dentist, her husband always has a degree at a job. He's always another dentist, a banker, finance, lawyer, physician, MD. And so many times the male dentists, they fell in love with the waitress at the Waffle House. And so I just always see when a woman dentist marries a male dentist, it's double income, and they delay the childbirth. Instead of getting pregnant at 16, it's more like 26 or 27, and they just accumulate so much more money. And it just seems like some of these dentist lawyers, like you talked about predatory behavior, that a lot of dentists are psychopaths. I think dentists, physicians, and lawyers attract a lot of people who think, oh my God, if I marry you, I won't have to work. And you see it in the first date where they bring the bill and she doesn't even attempt to get out her Visa card, and she doesn't even try to pay. She's basically just sitting there like, look at all this. You want this? You're buying the dinner. I'm not working. I don't want to go. And, you know, it's crazy. And then that type of person, when it's vacation, they don't want to go to the lake and camp and fish. They always want to go to Hawaii. And I've told so many dentist couples, I'll say, I just want to go down everything about what you do and show me where you're even in the median percentile. House. Well, you have too much house. Car. You have too much car. Vacation. Why do you always have to get in an airplane to go on vacation? I mean, clothing, shoes, jewelry, boots. Her wedding ring is 3 carat, and her 3 sisters each have a 1/4 carat. I mean, when you just overspend in every single and I tell a lot of dentists, you know, do you realize you're a dentist because you kind of act like you're a rock star? I mean, did you put out a record that I'm not aware of, or do you have some band that you're playing in? I mean, why do you think going to school, learning how to do root canals means that you're going to live like Rod Stewart and Prince? I mean, so it's not what you earn, it's what you burn. And I tell the kids in dental school, I mean, this is why it's Dentistry Uncensored. Every time I'm in dental school, I always say, you guys in the room, they're always asking, do you think I should specialize? And I say, well, you should specialize if that's all you want to do. But the smartest decision you make in dental school is marry one of them damn girls in the class. You're never going to find a greater collection of women to pick than in your dental school class. You've been in there 4 years. If you can't determine what this girl's all about in 4 years of dental school, you're brain dead. But boys, I call it the peacock thing. They see something pretty and they wave all their feathers and the peacock effect. They're like, oh my God, I want that. And it's like, okay, well, she's going to destroy $10,000 a month of capital from age 25 to 65. And you could have married someone who creates $10,000 of capital. She's one of your classmates. And the difference between marrying the chick at the Waffle House who doesn't want a job and wants this nice lifestyle where you overspend on everything, versus marrying that girl sitting next to you in you know, dental morphology, is about a $10 million difference. One's going to destroy $120,000 a year for 40 years, and one's going to earn $120,000 a year for 40 years. I mean, it's like two sides of the Grand Canyon.
A couple of things about that, Howard. First of all, I hope there's a large enough number of young dentists watching us talking and watching you with that message that some of them buy into it and moderate their lifestyle, because it's also expected by society that dentists are going to drive fancy cars and live in a fancy place and take fancy holidays. So you're doing something very positive by talking this way. I'm convinced that people who go into healthcare are differently motivated than people who go on Wall Street. The numbers on Wall Street, the potential is unbelievable, as you know, as we mentioned earlier. So people who are attracted to the numbers probably would not go into dentistry. But you see a lot of these people that you described who are living in more house than they need and driving more car than they need. And I hope that some of them are listening to you. And by the time they get out, about 10 years out or so, they start seeing the truth of what you're saying. They're living paycheck to paycheck when really the paycheck is pretty big. And so I really hope that some of them are listening to
and
what
here's
you and I
another psychological thing. Like, I drive a 2004 SUV Lexus, okay? Every time I take it in for an oil change, you're like, well, if you just give us your car and $100,000, you could have a 2019. Like, it's like, well, when you have to reach into your bank and give someone $100,000, you won't do it. You're like, my car's fine. You know, it's got a dent. I mean, I was back in the garage and my granddaughter opened the door. She decided she was going to open the door as I'm moving out. So it bent the door and she got upset. I'm like, I'm just glad it didn't bend you. I don't care about the door. And I body slammed the door back and it's all bent and all that stuff. But see, when you don't have $100,000 and someone shows you that new 2018, 2019, 2020 car, you start drooling all over yourself and you get on your hands and knees and start licking the tires and kissing the hubcaps. You buy those luxury items. It's so much easier to buy with other people's money and they finance it to you. If you say, oh no, you got to save up $85,000 to buy this car, when they're holding their $85,000 in cash, they won't give it to you for a car.
You say a lot of things that are true there, but when you borrow money to buy a car or anything else, you're really borrowing from your future earnings. You're borrowing from yourself. In the future, you will have to keep less than you make so that you can repay your debt. So you're borrowing from yourself. And like I said, I hope that enough people are listening to this that they will buy into the Monday Morning Millionaire attitude, which talks about how we got too much car. And will start coming to their senses. Yeah.
The Monday Morning Millionaire. Now, where can they buy it on Amazon, or do they just buy it at your website, Monday Morning Millionaire? Where can they buy your book, Monday Morning Millionaire, by Milan, Somborac, DDS?
You know, we haven't had it on Amazon yet. I wrote another book, Your Mouth, Your Health, and so I had it on Amazon, and they didn't do nearly as well as Biomed, which is a company that puts on continuing education programs. So I haven't had this book on Amazon yet.
That's free to subscribe.
But you should post this on Dental Town. So Dental Town has 250,000 members. They have 50 categories: root canals, build-ups, crowns, all that stuff. And one of them is finance. And you should go in there and finance because you're a dentist. You're a homie. You should go in there and focus and tell them what you're doing. And I think that'd be the best marketing ever. And then I'll post this podcast in that thread where you're talking. One of the largest threads we have on Dental Town, it's got like, I don't know, 20, 30, 40, 50,000 posts, is only 3% can retire at age 65. I mean, they're all talking about that because when you're young, I remember when I got out of school going up to Gordon's every month for a year and all these it was so fun to do all these fillings. But I have to tell you, after you do 10,000 fillings, you don't wake up in the morning and say, my God, I want to do a filling. So, when you're young and you're really productive and you're really making bank, you have to be learning how to save your money and not burn your money, because then you're going to get adjusted to this lifestyle, and then you're going to run out of energy and you're not going to want to work that hard to maintain that lifestyle. And then you didn't save because Muffy never had a job and you overspent on house, car, vacations, jewelry, everything. And then you find yourself at 65 and they're depressed.
Universal truths are universal for a good reason. And one of these universal truths, which comes from some European society, I'm not sure which one, it says we get too soon old and too late smart. And do you think that that's going to change? You know, all these people that you're talking about who have too much car and too much house and too much vacation will get too soon old and too late smart, and that will probably remain in place forever. So the fact that a lot of younger people are watching what you're saying, Howard, might well turn some of them around. They won't turn all of them around because we get too soon old and too late smart.
I cannot tell you how many times in 30 years I've walked one of my teenage male patients out to his car and say, look, dude, you're pushing a lawnmower for $10 an hour and you have a $30,000 F-150 truck. You could have gone to one of these schools. Is it ITT Tech? And there's another one. So, but anyway, you can go there, and for that price of that truck, they could have got a 2-year degree, and all those technical training schools. What it is the big companies like Intel and Motorola, they need a guy that knows how to do this, so they donate the $1 million machine or the last model they had, and then when you're done, it's like 96% job placement. And I'll say you go from making $10 in cash to $25 an hour with medical insurance and dentists. I mean, why do you have, and I'm right across the street from the Guadalupe Indian Reservation, so I have people that are doing manual labor for cash on the table that have a purple $30,000 lowrider. And then the dentists say, well, I can see that. He should not have a lowrider. He should go to a tech school and get a big job and everything. And then I'm like, well, look at your house. Look at your cars. Look at your vacations. I mean, what I would say, after 30 years of this game, and you've been doing it longer, is that dentists have a spending problem. End of story. So do lawyers, so do physicians. You almost never meet a frugal dentist.
Do you think that problem is unique to dentists or unique to Homo sapiens? Because, you know, deferring gratification is an indication of maturity. And deferring gratification is not an easy thing to do for most people. I'm going to do without that fancy car. I'm going to be like Howard Farran and drive a 2005 car until it falls apart. And so that could be a characteristic of all of us.
And when we were at Creighton, we drove by Warren Buffett's house in Omaha. I mean, he doesn't even have a wall around it. I mean, that guy is. In fact, when he bought his jet, he called it the indispensable. There was not indispensable. What do you call it? Something it was completely irrational. There was no good reason for it.
Yeah, he called it the indefensible until he had to go. Yeah, indefensible, that's right. And then he had to go to New York to settle some Salomon Brothers issues, I think it was, where he was a major shareholder. And then he changed its name to semi-indefensible.
Well, hey, let's get Timothy A. Brown to come back for the close. Tim, we've been talking for an hour. I can't believe the hour is already over. But after listening to us talk, and you are in a very unique situation because you have been watching dentists sell their practice at the end of their career for decades and decades and decades. So after hearing everything we talked about, what would be the closing points that these young 30-year-old dentists should swallow, digest, and not forget?
I have 4 words, Howard. Live modestly and stay married. After that, I can elaborate, but I think practice ownership is a better investment than any other investment you can make in dentistry. Be a solo dentist or at worst 1 or 2 partners. I would stay away from the corporate model. We've referenced it today and referenced it in our episode 1111 of Uncensored. Buy a practice or build a practice, be an owner, live modestly, of course. And if you're going to invest, which you should invest, and Milan's advice is about 50% of your excess earnings to debt and 50% to investment. I believe in the Monday Morning Millionaire Program. I have no financial interest in Monday Morning Millionaire, folks. For everybody watching, none whatsoever. Canadians believe in this. There is no financial benefit for me. This is a mentor. This is a good man that young dentists should listen to. So all you young dentists, listen to this man. Watch this episode again and share it with your friends. Post it on your social media, please. Stay to the basics. For $180 a year, you can get this advice and you can unsubscribe after a year. And that's 180 Canadian, which is less than American. You know, stick with the basics. It's a basic profession where people need your help. You need to stick to your knitting, stay to your core competency. Don't get outside of it, live within your means. And that's financial advice that's been given to all of us, all through our life, from our parents, our grandparents. Your professors gave you that. So few people actually follow it. And those who do have very handsome lives, do very well, and are living peacefully and in a very good space as a dental practitioner. They're helping their clients, doing well for the patients that they have, and they're happy. Don't live beyond your means. 4 words: live modestly, stay married. Monday Morning Millionaire from Dr. Milan.
And and Milan, you should write an article about this for Dental Town magazine. It's mailed to 125,000 dentists each month in the United States and Canada, and it's digitally sent around the world. And you should go to Dental Town and go under finance. And if you're shy because you don't want to see salesy, just say, you just did a podcast with Howard and Howard wants me to post this here. But it'll start a big discussion. And I think this is so important because dentists do have issues with burnout. So this is the cure for burnout, is when you get to go to work because you want to, not because you have to pay for stuff that you bought 5-10 years ago. And if you're a girl in a dental school class and you have some guy picked out in the class, you should text him this video, which explains why that guy should marry you and not the girl at the Waffle House. So, all right, guys, thanks so much for coming on my show and spreading all your wealth.